and throw focus on what's the macro picture looking like. We've got Neel Gopalakrishnan from S&P Global Ratings joining in on the show right now. Neel, hi, morning. Was just going through your note, which interestingly says that Indian corporates may actually double their Capex by 2030, and the estimates up to about $850 billion in corporate Capex by that year. Tell me, what assumptions are you making where you think one could actually hit that figure? And I ask purely because the global construct right now in terms of the news flow, both what some of the internal economies, the geopolitical landscape, things seem to be, changing ever so fast.
Good morning, and thanks for having me on your show. So we expect corporate capex will double over the next 5 years. And as you said, it could touch about $850 billion US. Now, our study is based on the capex trends across the top 100 listed companies in India, together with some of the unlisted companies that S&P rates. And we also looked at a study done by our subsidiary in India, CRISIL Intelligence. The growth in capex is largely driven by the positive growth outlook around India and also some of the favorable government policies and targets. For example, one of the key drivers of the capex over the next 5 years is going to be the power sector, where the government has set a target of 500 gigawatts of renewable energy capacity by 2030. And power and transmission alone, we think, could account for about $300 billion of capex. The other big areas of investments are likely to come from the airline sector, where the existing airlines, particularly the top two, are significantly expanding their fleet size. And certain other sectors such as airports, where we see a significant pickup in investments, and new areas such as green hydrogen and so on.
Point taken. An interesting note you have there. We were going to ask you about the sectors that you think will lead the capex. But apart from aviation, you also have spoken about power, renewables. Tell us, how do you think capex spending over here is going to frame in the next 5 years?
Right. So as I said, the government's thrust on infrastructure is likely to be the key driver of capex trends of corporates in the next few years. So if we look at broadly the two main sectors, which is infrastructure on one side and industrials on the other, we think the spend by the infrastructure sectors could actually double from what they were in the previous 5 years. And as I said, power, which includes a significant amount of investment in transmission, will represent a chunk of this increase. On the other side, if you look at industrials and some of the traditional sectors like steel, cement, telecom, these sectors are probably likely to grow at a much smaller pace, but still steady. So over this 5-year period, we think these sectors would grow compared to the previous 5 years by about 40 to 50%. And when I say grow, I mean the investments in these sectors.
Okay. And while we're talking about how positive the capex could be in the years to come, also help us understand any leakages in the system that could lead to some issues on this front. How real is the risk of cost overruns and delays, especially in capital-heavy sectors like we were just talking about power generation and transmission?
That's a good point that you raise, particularly in the power sector, and where we expect a significant amount of the investments to come from the renewable space, which is one of the sectors where we think existing leverage is already quite high. And going forward, given the scale of the investments, companies are likely to borrow a significant amount to fund these projects. In fact, our study also shows that it's mainly the power sector which will actually need a significant amount of borrowing over the next 5 years. So what would be key is, in order to manage the increase in debt on balance sheets, the execution of projects has to be very timely. And renewables, historically, we have seen issues with issues like land acquisition, and more importantly, in the even when the projects are complete, risks around the evacuation of power which is generated, which is the setting up of adequate transmission lines. Now, one of the things we have noticed is this time around, at least the planning of the authorities seems to be in place. As I mentioned, transmission is a very significant area of investment and could represent about $100 billion totally over the next 7 years. So the transmission planning of the transmission network already takes into account the renewable capacities and the zones in which these renewable capacities are coming up. So as I see it, the planning of the capacities to come in place is already there. Now it's a matter of execution. And the recent trends indicate some delay in setting up of capacities, but it's improving. And as we speak, there's more than 100 gigawatts of renewable energy capacity in the pipeline, which should come on stream in the next year to 18 months. So things are looking positive, but as you say, execution of these projects and then operational performance is one of the things we'll need to monitor.
Neel, also wanted to, assess and analyze what happens to the manufacturing sector, especially when it comes to electronics, auto components, and the benefit coming in from the global supply chain shifts. Or do you think it's the China plus one story, which is still at early stages for us? I mean, how material do you think this entire shift could be? And I mean, this is at a time when Apple's manufacturing preference has already shifted to India now from China earlier.
Right. That's another interesting point. And indeed, the changing trade flow, the risks around trade flow, and some of the global majors as initiatives to diversify their supply chain, or the China plus one strategy, that could result in an opportunity for India to grow in certain sectors. As you mentioned, mobile phones is one of the more obvious names that comes to mind. But some of the other sectors could be, and this is looking at what are some of the big exports of China, which India could easily replace. And some of these sectors are medical devices, machinery, semiconductors. So there are opportunities, and some of the government initiatives like the PLI scheme would aid this. But in our view, this is likely to be a slightly longer term development. So things are not going to change in the next year or two, but rather over several years. And secondly, if you look at the investments in these sectors, particularly electronics, medical devices, etc., the scale of investments is not going to be very large. So we are not talking about hundreds of billions of dollars. So there will be a small proportion, but in terms of trade and opportunities, the potential is huge.
Appreciate you joining us. Very interesting note you have released on this entire Capex cycle that you expect from the corporate sector in India. Glad to have your thoughts on the same, and thanks once again for joining us.
Thank you.
Okay, well, on that note, let's shift focus